If you want to make big money in the stock market, you have to be prepared before the opportunity comes. That's exactly what today's video is about. Smart investors don't just buy stocks randomly. They do their research, build a watch list, and wait for the right price. Today, I'm revealing the 4 stocks high on my watch list, along with my exact target buy prices. I'm not buying them at today's price. I'm waiting for the best opportunity. Before we dive in, hit that like button and subscribe so you don't miss future investing strategies. Let's get started. Why TSM? TSMC is the largest chip manufacturer in the world, producing chips for Nvidia, AMD, and Apple. No need to bet on a single AI stock. Just own the company that makes chips for all of them. The company currently has a market cap of $1.1 trillion and is up 60% in the last year. Growth potential. Revenue expected to grow 30% this year, followed by 19% each of the next 2 years. Earnings expected to grow 28% this year and 18% next year. Valuation. Current forward PE, 22.6x, below its 5-year average of 25.8x. Stock is already at a fair valuation, but I want an even better deal. Target buy price. $180 per share. I'm selling a cash-secured put to potentially buy at this price while collecting premium. Why Qualcomm? Many investors think Qualcomm is just a supplier for Apple, but that's not the case anymore. Major expansion into AI, automotive, and IoT, Internet of Things. The company has a $110 billion market cap and is up 12% in the past year. Growth potential. Automotive revenue grew 61% YoY, a key future growth driver. Internet of Things, IoT, business grew nearly 40% YoY. Plans to hit $22 billion in non-handset sales by 2029. Valuation. Forward PE, 14.7x. Very cheap considering its free cash flow yield, 6.7%, shows strong profitability. Target buy price. $150 to $155 per share. A 10% drop from current levels would make this a steal. Why LMT? One of the largest defense contractors in the world. Makes the F-35 fighter jet, which sells for $82 million, $109 million per unit. A stable, recession-proof business. Governments don't stop spending on defense. Short-term headwinds. New administration proposing an 8% defense spending cut. This has put downward pressure on the stock. Long-term outlook. Revenue expected to grow mid-single digits in 2025. Free cash flow expected to hit $6.7 billion next year, a new high. Valuation. Forward PE, 12x, super cheap, historical average is 18x. The stock has pulled back 30% from its 52-week high. Target buy price. $395 to $400 per share. A strong support level and excellent long-term value. YTTD. A leader in digital advertising, like Google Ads but for the entire internet. Massive long-term growth potential as ad spending shifts to digital platforms. Why did the stock crash? Missed earnings expectations by just a small amount. Revenue grew 22% YoY but missed analyst estimates. Guidance was lower than expected, causing a 35% drop in the stock. Long-term outlook. Expanding EBITDA margins to 44% by 2026. Digital advertising is cyclical. This pullback could be a great buying opportunity. Valuation. Forward PE, 44x, expensive, but justified for a high-growth stock. Price to sales, 13.6x, half of its 5-year average. Target buy price, $70 to $75 per share. If it drops here, I'll be loading up. We covered 4 high-quality stocks, each with a clear buy price. TSM. Buy at $180 QCOM. Buy at $150 to $155 LMT. Buy at $395 to $400 TTD. Buy at $70 to $75. Which one is your favorite? Let me know in the comments. Want to see my full portfolio and top option trades? Stay updated on the best stock picks by subscribing to my free investing newsletter. Hit like and subscribe for more stock market insights.